Mr. Singh,
Right.
thanks for joining us. Good
Thank you.
turnaround quarter you've seen this time. What have been major factors at play?
Mm, well, don't judge us on this quarter. Please
Okay.
judge us on the year. Last year, we were 348 crores down. This year, we are 736 crores up, PBT. Yes, most of these gains have been got by the company in Q3 and Q4. The new team have moved in during Q2 because on a journey. The journey started in Q3 and Q4. You see a full bloom of the results, and that is the momentum we plan to continue.
Okay. Are you being modest, Mr. Singh? It's been a pretty good quarter. Are you bracing yourselves for any headwinds, or I'm just looking through some of the the release on earnings, because you actually seem to have a lot of potential things that you're working on that could drive growth going forward.
Yes, broadly, our vision is since this has become a principally lignite centric company, the vision the top management shares is to future proof this company and to take it to the next. Yes, it still has a shelf life of few decades, but that can't principally drive the growth. So we plan to ensure in the medium term, 3 to 5 years, a trajectory where 50% of our revenues start coming non-lignite resources. Some of these, the smaller ones, you should start see those revenues trickling in towards the end of the current FY, some next FY, and the longer, larger, heavy capital outlay projects. I think you should see that happening uh, over the next 2 to 3 years.
All right. And in terms of the marked improvement in sales, talk us through what were the primary factors at the moment, whether or not you see, I know you mentioned that momentum may be a little choppy, but really what the trajectory looks like, if we could just talk about that a little bit more detail.
Okay. What we did, I'll tell you, you'll be able to judge us on that. Our volumes had contracted. We were not recipient to the way the market is operating, the prices that are there. We were not handling our customers very well. Most of them had abandoned us, become dormant customers. They were unsure of how we would treat them. Most of them have come back. Many new have come back because of this huge cost difference between the price of imported coal and us. Our customers are more satisfied, more certain. Their entire process of treating with essentially eased, uh, things like that. So this is what we did.
Okay.
So
And in terms,
we were
sorry, go
reduced
ahead.
to say 750 to 800 customers, the permanent ones which are there for the entire year. Now that number has gone up to 1,300. Yes, we have 6 to 700 customers which are there for half of the year. Their plants function, and half of the year they're not there. But this is where we've reached.
Okay. In terms of outlook on the industry as well, pricing, margins, just what kind of headwinds, if any, you're looking at on that front, how you see things shaping up from here?
Headwinds, yes, the principal concern is uh, the prices of imported coal moderate,
Yeah.
and they moderate significantly, which I don't see likely because we are already at a significant cost differential. If you compare per GCV value, we are at half the price. So even if they moderate and severely, we still continue to be in business, to be in a position to churn out similar kind of top line and bottom line numbers that you have seen in Q4. Yes, monsoon, second quarter, yes, there would be a change, but that is cyclical and that is what happens every year.
All right, Mr. Singh, we'll leave it there. Thank you so much for joining us and taking us to the
Thank you
earnings.
so much.
Yeah.
Thank you
Thank
so
you.
much.
If you like the video, do like, comment, share, and subscribe.